Welcome. I am Danielle, the marketing manager here for CollectiveSun. Thank you for joining our webinar on Direct Pay 2024, digging into the details. We'll be sending out a recording and resources that follow this week. Today, I have the pleasure of introducing our Director of Sales at CollectiveSun. Nicole Withrow packs the punch with over 25 years in sales management world, juggling contract negotiations and steering projects to the finish line. But hold on to your hats because there's more. She's not just an impressive resume, she is a shero for the nonprofit realm, having guided hundreds of organizations on their electrifying solar adventure. Let's hear it for Nicole, leading the charge towards a brighter, greener future. How are you, Nicole?
Hi, Danielle. I'm fantastic, especially after that amazingly generous introduction. So thank you very much. Hi, everyone. And before we get to today's presentation, I do just want to remind you that this webinar is for educational purposes only and does not constitute legal or tax advice. In today's webinar, we're going to discuss pre-filing registration timing, special considerations for 630 year-end filers. We'll take a look at tax forms associated with the direct pay filing, talk about nonprofit solar financing solutions available through CollectiveSun, and then we'll open it up for Q&A. All right, for anyone joining the webinar today who's not familiar with CollectiveSun, we are a solar finance company dedicated to serving nonprofits nationwide. We've been connecting nonprofits with capital for their solar projects since 2011. While the passing of the IRA brings change to the solar and solar finance industries, as well as more options for nonprofits going solar, our role remains the same, and that's to help nonprofits navigate their solar journey and to connect them with financing solutions that fit the unique needs of their organizations. In just the past 6 years, we've partnered with over 200 nonprofits nationwide on their solar financing. Not only are we very proud of that, but as you can imagine, it has made us very familiar with the challenges nonprofits face going solar, as well as the challenges of the solar installation process itself. It's that familiarity and expertise that have positioned us as an easy button for the nonprofit solar journey. At this time, I'd like to introduce my colleague, Lee Barkin, Chief Community Officer, CPA by trade, and our resident policy guru here at CollectiveSun. As you've heard me say many times, if you've joined previous webinars in this series, breaking down bill text and tax code into digestible language is one of Lee's many superpowers. And Lee, whether you're actually donning a literal superhero cape today or not, would you please be so kind as to kick off today's conversation? Because I think we're all pretty excited to dig into the details of navigating direct pay.
Thank you, Nicole. And wow, thanks for that introduction. And Danielle, thanks for kicking us off and putting together an amazing slide deck presentation. Direct pay is a phenomenal topic we are all exceptionally excited about. And we're starting to learn a little bit more. We're further along. You know, the bill text is, it's put out more than a year ago, and we've got some guidance and some preliminary, proposed regulations. We're still waiting for the final regulations, so it's worthwhile to mention that if you're watching a web archive, today is February 22nd. We have the proposed regs and not the final regs, so this can change, and we're all waiting eagerly for that to be released. Treasury has said sometime in the spring. I'd expect in a couple weeks, probably sooner rather than later. That they've been working extremely diligently and hard on all of these, and have taken a lot of feedback and trying to make something as workable and streamlined and as helpful as possible. But just keep in mind that caveat that some of this is subject to change, and I'm sure there'll be more information once those final regulations are promulgated. But we're in a situation now where these rules are in effect, and for projects placed in service in 2023, there's folks who actually have to file tax returns, and so things are in motion. Today, this webinar is really for people kind of in that category. Like, you may have put a project in service in 2023, you might be in the middle of construction, or you're contemplating a project and just want to kind of understand, what am I in for? What's this roadmap going to look like? If you're new to direct pay and you're still trying to determine if you're an applicable entity or which credits and so on, I would start here at the summary. That is a really good place, and we're going to dive into more of the details. folks in this call, you've probably already read the proposed regulations, and you may have even started on your pre-filing registration portal to get that pre-filing number for your project. So where to start? The theme for today is really going to be about timing and particularly how it affects your eligibility. Now, in prior webinars, we talked a little bit about how your project has to be placed in service in 2023. That remains true, but there's some additional considerations, which is to say that your tax year also has to start in 2023 or later. So both of those conditions have to be true. And that means if your tax year started January 1st, 2022 and went to 12/31, technically the way this is written, you are not eligible for direct pay. But in addition, what if you have a fiscal year, a middle year where you start on July 1st and you end on June 30th in 2023? Well, in that case, you are technically not eligible for direct pay unless your project started on July 1st or later of 2023. So if you're a typical calendar year kind of filer, a lot of nonprofits are just, January to December. All you got to keep in mind here is that it's 2023 and later. If you're a mid-year with a June 30th year end, this is potentially problematic because if I said, hey, I put my product in service in February of 2023, well, that meets the first test. But are you eligible? The answer is it depends. It depends on when is your tax year. So if your tax year ended on June 30th, 2023, you may not be eligible. And if your tax year started on January 1st, 2023, you are probably eligible, subject to a bunch of other considerations. So this is giving folks a lot of heartburn right now, kind of absorbing this. And Treasury is aware. They have come out and said, they've made some comments and said, look, in the final regulations, there's going to be a couple paragraphs like on this topic. We don't know exactly what they're going to say. It's possible they will provide some relief. They may provide relief for everybody. They may provide relief just for folks who don't normally file a tax return, like government entities. I was on a call with some Treasury folks in a school district, and the school district was like, hey, we deployed like dozens of electric school buses during the year, and we thought we'd be eligible for this, this particular tax benefit. And now you're saying you have to start your tax year in 2023. That means half these buses are going to be eligible and half are not. And so we're running into some of these situations, and Treasury basically said, look, just wait until the final guidance comes out. This is going to be addressed. So they may address it for everybody. They may address it just for special cases like governments, municipalities that don't normally have a tax filing. But just kind of wait and see. But the letter of the law, as it's written in the proposed regulations, is that your tax year has to start 2023, January 1st, 2023, or later in order to complete to be eligible and technically complete a tax return that I'll show you later in today's webinar. So that's, that could create some heartburn. I've heard of some folks even talking about, well, can we change our tax year? There's going to be a lot of sort of dialogue around this topic. So just hang tight till the final regs. And then if you're in this category where you started your tax year January 1st, 2023 or later, you're fine. You don't have to worry about this particular issue. So life is timing. There's a couple things we got to pay attention to. One is, when is the system placed in service? Placed in service, the tax definition is ready and available for its intended purpose. But there is no like specific language that says, what does that mean for a solar project? There are varying interpretations. Some people use substantial completion. Some people use utility PTO. Some people use commercial operations date certified by an installer. Like there's different ways that different folks are doing this with varying degrees of, tax risk. Utility PTO is a particularly helpful one because it's a third-party attestation. It's a piece of paper from a third-party utility saying, you have permission to interconnect with our grid, but it's all facts and circumstances based. So there may be, arguments for different approaches. There's nothing new about this issue of, place and service date and tax years. And for any kind of asset, if Nicole, if it's December 31st and you're getting ready for the New Year's party and you go on Amazon and you order a stapler for the business, does that count for that tax year or the next tax year?
Oh my goodness, Lee. That's a great question. Maybe it depends. It could be
Well,
very yeah,
exactly, it depends.
circumstances specific.
It's like, well, was it placed in service? Well, you have to ask these questions. Well, when did it arrive? Did it arrive on December 31st or did it arrive on January 1st? If it arrived on December 31st, it was ready and available. Did you actually use it on December 31st?
Right.
Well,
It
not
would be
necessarily, that
impossible.
may not be it.
Same day
Well,
delivery.
if it arrived on January 1st, it would have been impossible, but you might not necessarily had to have used it. What if it was just ready and available for its intended purpose? Like, you get into all these real sort of dynamic questions, and this isn't really the forum here to have that, dialogue. That's really with you and your tax preparer. Can't emphasize enough how important those conversations are with your tax advisor, because we are not providing tax advice on today's call. There's exceptions to rules and there's exceptions to the rules, and you really have to dive in. But look, if you're just trying to shorthand this and, if you just talk about utility PTO, it's not when the project starts, it's not when milestone payments are made. It's really when it's placed in service. Think a utility PTO date as a good proxy, and you're placing it in service. It is placed in service in a particular tax year. So again, going back to my example, if you put something in service in the beginning of the year in February or March, what tax year is that in? Well, it depends. If you have a tax year that started January 1st, you put it in service in the 2023 tax year. If you have a tax year that started 7/1/2022, it may have been placed in service in the 2022 tax year. So, be aware of those two dynamics when it's placed in service, and then what's your tax year. The next item is the pre-filing registration process. So there is a portal that opened in December of last year. You can go to, enter in a bunch of information, and get a number. And that number is going to be needed on your tax returns, which are going to get filed. When do you file those tax returns? Again, critical question, depends on your tax year. If you're a 12/31 filer, it's going to be May 15th. If you're a 6/30 filer, it's going to be November 15th. If you're a mid-month filer somewhere, it's always 5 months and 15 days after your year end. That is your due date. Now you can get extensions granted, and then you sort of get an extension for all this, other work that we're talking about along with that. So if you place the system in service sometime in 2023 and you're a calendar year 12/31 filer, you have until May 15th, but you can get that extended if you can't pull all this together. And the IRS has said the pre-filing registration process, they want 120 days in order to get you that registration number. I actually think they're being super diligent and helpful. They'll probably get it done sooner than that, but they're asking people to plan for 120 days, which means you really don't want to wait until May 14th, to do the pre-filing registration. Give them some time, get that in now so that you don't have any issues. The IRS has also said that if you do all this work early, we're still not going to recognize it until your due date, like May 15th. So if you've already submitted all this stuff and you're like, where's my check? They're not going to even consider that until May 15th as the start date to process, and then additional time, to process the refund. What if you don't file a tax return? Another great consideration. Direct pay is available to a lot of different kinds of entities. So if you're a government entity, if you're a tribal organization, you don't have an annual filing. And so the regulations, the proposed regulations say, well, follow your accounting year. So if your accounting year ends on June 30, you should plan to file the tax returns, the necessary returns, and we'll be talking about the 990T form that you'll be filing. That form will be due following, the the schedule here based on the accounting year that you have. Okay, what if you don't have an accounting year? If you're like a really strange oddball case, they address that too and say just use a calendar year. Like if you don't have a regular accounting year, which seems like a unique, very unique circumstance, but they really covered all the different possibilities here. Now, what about religious organizations? This is kind of a trick question because, first of all, if you're a church or a synagogue, mosque, temple, you're saying, well, I don't file anything to the IRS. And you're correct that you have an exemption. It turns out that Form 990, that actually isn't a tax return because there's no tax due. It's an informational return. An informational return provides information to the IRS, kind of like a W-2 that you might get or a 1099. Those are informational returns. And if you're a religious organization, you do enjoy an exemption from the informational return known as a Form 990 that typical 501c3s need to submit. However, you do not have an exemption from a 990T. And many nonprofits may not be aware of this, but you've already had a 990T option to file uh, and a requirement to file, I should say, if you have gross income that's unrelated to your exempt purpose of $1,000 or more per year. So 990Ts have already existed for a very long time. And nonprofits have to file a 990T if they have more than $1,000 of gross income unrelated to their exempt purpose. And so this 990T form is really nothing new. It's just that a lot of nonprofits have never had to file one because all their income was related to their exempt purpose and they never had unrelated business income taxes or UBIT. UBIT is a 5-hour conversation that we are not going to delve into today, other than to say it is extremely complex. There's exceptions and more exceptions. And this is an area that you really need to look at on a facts and circumstances kind of basis because it gets complicated. So, Nicole, if you're running a nonprofit and you charge money for parking in your parking lot, is that UBIT?
It depends.
It depends.
Right.
Are you that is the sort of the classic CPA answer.
Yeah.
It it depends, and it depends on a variety of factors. So is it for the convenience of your members? Like if you're a church and you charge for parking on Sunday, those are all members who are participating. It's probably not UBIT, but if it's open to the public and there's an attraction next door and people come and park in the lot and pay money, that probably is UBIT. But then there's exceptions. So is it, regularly held? What if it's just a one-off? There's a carnival next door and you decide to rent parking. Well, that may not be UBIT. And what if you lease the land to a third-party parking company and they charge people for parking? That might not be UBIT because there's an exception for leases of real property. And so you kind of go in all of these back and forth and back and forth. And generally speaking, nonprofits try to avoid encumbering themselves with UBIT because then they will owe taxes on them. But a lot of times nonprofits just don't know. They're not aware or don't have um, that level of sophistication in their internal accounting capacity, and they may just be confused by a lot of it, and they may not have filed simply because they were unaware or uncertain about these. There's all kinds of debate and conversation around churches and renting out church steeples for cell phone towers. That may be UBIT, it may not be UBIT. It kind of depends how the lease is written. It also depends if it's debt finance property. So if you have a mortgage on your church, then that's a determining factor if you may or may not be subject to UBIT for a lease of a cell phone tower space. If it's on the steeple versus if it's on some other like the rules just get really complicated. And I think a lot of folks are just unsure about this. But the salient point is that if you're a church, you've always had an obligation to report UBIT, whether you knew it or not. You've always had a potential 990T filing obligation. It's just we've commonly understood we're exempt from filing. That really just means the 990 informational return that you are exempt from as a religious-based organization. So is that clear as mud,
It
Nicole?
depends, Lee. It
I guess
depends.
it depends. All right, well, it's going to get even more interesting here as we dissect all of these forms and what's the actual work that you have to do. These forms are sequential and they stack and sort of on top of each other. 3468 is the original, it gives rise to the credit, the original credit form. 3468 is specific for certain kinds of credits. There's dozens and dozens of kinds of credits. There's 13 different credits that direct pay is eligible, for, but there's beyond that many dozens of other credits that you can get. Sometimes they have different forms, sometimes they don't. But if you're a nonprofit putting solar panels on your roof, simple, like it's 3468. That's the form you're going to use. You could have multiple other kinds of forms for different kind of tax credits, and all of those are going to roll into 3800. So you give rise to the credit on a source form like 3468. It rolls into 3800, which is general business credit, and they all kind of show up there. And then 3800 rolls into your 990T, which is the one we keep talking about, which is a form specifically for UBIT. And when you pick up a tax form, Nicole, what do you do? What's the first thing when you pick up a tax form?
If this were Jeopardy, I would say I'll read the instructions for Lee.
That is definitely the first thing you do. You read the instructions, um, and then the next thing you do is you hand it to a tax preparer who will complete the form for you, which I highly recommend. But if you did pick up, you're just professionally intellectually curious, 3468, the front page, they always tell you what's new. And I'll make this a little bigger so even I can read it. And right on front, they said, hey, there's something new in 2023 tax year. There's this tax exempt and governmental entities for tax years beginning after 2022. Applicable entities can elect to treat certain investment credits as payment of income tax. Wow, that's brand new. That's elective pay. Transferability, in case you were curious, transferability is not available to nonprofits. If you're eligible for direct pay, you are not eligible for transferability and vice versa. But in case you were curious, like this is how they also do transferability. If you have other, for-profit, projects and you heard about transferability, how does all that work? Well, they're kind of, intertwined in this process. So just be aware of that. Don't worry about the advanced manufacturing credit, but note on the bottom, this pre-filing registration. Oh, there's a pre-filing registration process that must be completed prior to electing payment or transfer of credit. And again, Treasury is asking for 120 days in order to go from the pre-filing registration to getting a number and approved. So as you start scrolling down, go down to part 6 in section B, and you will see the solar energy credit and a bunch of questions that you're going to have to fill out. There are references in here to other parts of the form. So if you're looking here going, okay, this is something about checking a box in part 1, line 11, and down here checking a box in line 9 and line 10, what is all that? If you go back, they're asking about bonus credits. So when we talked about domestic content bonus credits and energy community, and then low income community, this is where on the form you're going to indicate them. And then here later in the form in section B is where you're going to calculate them. And you'll notice that low income communities, it's an allocated credit. So you have to get a control number through that process. And this is where you're going to put it on the form. Just a side note on timing, if you've attended some of our other sessions, we've said that the low income community credit as an allocated credit, certain limitations on how many gets handed out, you have to get your allocation before you place in service. If you place in service and get your allocation after, you're invalidated. So the timing of getting the low income community credit has got to happen before any of this. And then you place in service, and then you fill out your pre-filing registration, and then you submit your tax return. So just keep that little nuance in mind. But this is where it's going to appear on 3468. And then as you scroll down, that was section B, and you keep going, C, D, E, F, G, H, I, J, K, L, L, M, N, you get to section N down here. And there's section N is on tax exempt bonds. Just a side note, if you're school and you finance with tax exempt bonds, you're going to have some implications you're going to have to deal with here. But the point I wanted to make is that everything basically rolls out down to this final number in line 32. And you'll see report this amount on form 3800, part 3, line 4A. So it's literally like a source credit. You fill out a bunch of stuff and then it sends you to 3800 for the next step. 3800, another form. What's new in 2023? Well, here you go. They say right on the front page, there's a pre-filing registration requirement. So if you intend to make an elective payment election, and for those folks playing Jeopardy and home gaming today, we have a new acronym, EPE. I've heard Treasury use this on several occasions. If you hear someone say EPE, they're talking about the elective payment election. That is going to require the pre-filing registration process, and you have to, do all this before you file your return. And they go on to say, beginning with tax year 2023, certain applicable entities and electing taxpayers can elect to treat these credits as elective payments. And then check this out. Any overpayments may result in refunds. So that's what is happening here in this process. You're basically claiming like you had unrelated business income taxes, but you had zero revenue, and then you have a credit. And so there's an overpayment, and that can produce a refund. What Congress did in implementing direct pay was pretty clever. If you take a step back and look at what they did, they took an existing framework and they said, we can introduce this into a set of existing protocols and just say it's as if you had, UBIT, but you have no revenue, and then you have a credit, and then there's a refund. It's a refundable credit. And that's how it all kind of flows through. I mentioned transferability, same thing with Form 3800. You're going to have separate sections we're not going to talk about today, but just so you know, that's there. So remember, we were back in part 6 of Form 3468. Here's line 4A. There you go. This is where you're going to enter that information. Now, you could have a bunch of other credits, and if you scroll up on this page, there's dozens of other credits. There's lots of different places that can give rise to a credit that are going to flow through 3800. Here's where you put in that registration number for whether you're doing elective payment or transferability. And all the numbers are going to flow through 3800. And then from there, they're going to go finally to the 990T. 990T, as I mentioned, has already been around for a very long time. I mean, the concept of UBIT dates back to like the 50s. I'm not sure if 990T was being used that far back, but this idea of unrelated business income taxes has been uh, salient for a very long time in tax law, and is not a new concept. And so this form is not a new form. This is the form you use for reporting unrelated business income and then figuring out and reporting the unrelated business income tax liability, how much you actually owe. And so some new stuff this year, they talk about certain tax years beginning for tax years beginning after 2022, in other words, 2023 and on, starting your tax year, you can elect to treat certain credits as a payment of income tax. And there's also this reference to a section 6417 applicable entity. 6417 is the code reference to elective pay. Like this is the section that you would go to read the actual text. And they're saying they've updated the form. So now there's a new checkbox for certain entities. I'll actually show you like what that looks like. The form, if you looked at it last year, will have these top line, state university, other trusts, corporation, 501c corporations, those were there. So if you're a church, you're a 501c3, you're just going to check this box. But there's other entities, like what if you're a government entity or you're a tribal entity? They had to add this new line for this particular tax year, specifically to address certain entities. They're going to be filling out this form that may not have had a tax, liability or obligation or any kind of, interaction in the past. The other thing that's new here is this checkbox, elective payment amount from Form 3800. It says check if filing only to claim this particular credit. So since this form can be used for a lot of different purposes, if you're just in here to go, hey, I'm here for my solar tax credit, where's my check? Like, you're going to check this box in here. But this concept is not new. Like 8941s are used for certain small business healthcare premium reimbursements that are refundable. There's 2439, which were used for some mutual funds and REITs that had long-term capital gains that were non-dispersed. Like there were other reasons, like these forms and these credits and the refundability. Like there's other stuff this was used for. This is now just the new one for 2023. And there you go. Just like they said, part 3, line G, here's the amount from Form 3800 that you're going to fill in. It's possible if you're one of those organizations that has UBITs, you might partially offset some of your UBIT obligations with this credit, and the net might be refunded. You might totally consume this credit with your other obligations that you might have. Like every nonprofit is different, their tax situation is different. But going back to this kind of point about you're now entering the realm of a tax return, not an informational return. So, these are public, this becomes public, it subjects you to audit, you're signing under penalty of perjury, and you're signing on the entire document. So you're attesting to the fact that if you had 0 UBIT and you're just here to get direct pay for your solar panels, you have to put 0 in there, and you're attesting to the fact that you have 0 eligible, income that is unrelated to your exempt purpose, and following all those tests and rules, and go back to the IRS publications and review them if you have questions. But this is an actual attestation that you're making. So it's raised questions about what is the potential audit risk here. And in the FAQs that they published, there was this really curious entry that, can we be audited? And the answer is yes. And there was no need to put this because you always could be audited. So why is Treasury reminding you that you are subject to audit by submitting this form every time you're always subject to audit? So there's really nothing new about this, and I can't emphasize enough how important it is. This is just like what you learned in kindergarten. Be truthful, uh, put all the information in, and just treat this with the importance that it represents, and make sure you're getting qualified tax professionals to help you answer these particular questions, because this will now potentially open this door. I don't think Treasury's going after nonprofits because they're putting solar panels on their roofs, but if they went out of their way to publish this in the Q&A, it just makes me wonder, like, why. And they actually put it in 2 different places in the Q&A, noting that just because you do this pre-filing registration and we give you a number, that doesn't mean we've okayed this credit. It just means we've given you a number you put on your tax return, and that will be part of an audit review conversation if that were to come up. So it's just something to kind of be aware of. And we're getting interesting kind of feedback. I think a lot of nonprofits out there are legitimately doing the right thing and are just unsure. They're not sure if because it's complicated, and so they just don't want to make the wrong choices. And the best advice is just to consult with your tax professional, because it's so facts and circumstances driven, and exceptions to the rules and exceptions to those exceptions. So please do consult with your tax advisors. Okay, recapping. Danielle, I still want to know how you found my elementary school picture. um, this keeps popping up in our webinars. Uh, but these are kinds of the things to be running through as you're evaluating like the work ahead. You're going to make a determination of when is the credit earned? When was it placed in service? When was it ready and available for its intended purpose? And then what tax year does that fall under? So you may need to ask the question, well, what is our tax year? That could be an important factor. Depending on when it's placed in service, you could be in one tax year or another tax year. And then you don't want to miss a filing deadline, because if you miss by one day, you become ineligible for the benefit. So knowing your tax year is really important, and knowing what year the credit was earned is very, very important. The value of the credit, we didn't get into that as much here, but there's bonus adders. Is it 30%, 40%, 50%, 60%? You're going to need that information and have that determination made before you fill out your forms. And then what do you have to do with providing for the IRS? You're going to have a pre-filing registration process. There's a portal, there's a really good user guide, there's some videos. Treasury has actually been extremely helpful. You know, they can't answer specific questions about tax related sort of interpretive guidance. But if you're getting stuck on a form or having issues with the portal, like they're actually pretty responsive and helpful, like getting getting folks on track.
Do they still have office hours going on for that purpose, or
So
not?
they as of February 22nd, they have ended, but I've chatted
Oh,
with someone there and they said that they're going to do some new ones. So
okay.
keep an eye out for that, because those are extremely helpful. And I know the IRS kind of gets a bad rap for this stuff, but I've been impressed with how genuinely helpful the folks who are processing these seem to be. They want to help you get this thing that, if you're eligible for. They really seem to be going out of their way to be helpful. And I just want to, highlight that. And if you have the opportunity to participate in any of their webinars or office hours, please do take advantage of that. And then lastly, wait patiently. I know it's kind of a cliche, but this is all new. There's going to be, learning curves for everybody involved, for nonprofits, for tax preparers, for all folks in the ecosystem. And then, of course, we don't know how long it's going to take once everything's been submitted timely in order to get that refund check back. If you're at the start of your process and you're thinking about those calendars, just remember there is a gap here in between the time when you have to pay the solar installer on a milestone basis during construction, and then you place it in service during a tax year, and then you have to wait till the end of that tax year. Then you have to wait 5 months and 15 days, and then you have to wait some other unknown amount of time to get a refund. I mean, best case, worst case, you could be talking 6 months, 18 months, 2 years. Like we really don't know what that ultimately will look like, but we know it's going to be a while, and we know you have to plan for that. And thankfully, we've been thinking about this a lot at CollectiveSun. Ever since the first drafts of the IRA bill, we've been developing products, and we are very excited about the products we have rolled out. And this is probably a good transition to pass the baton to Nicole to tell you a little bit more about those.
Perfect. Thank you, Lee. We do love talking about solutions in addition to tax code and bill text. But so CollectiveSun offers solar loans and leases to nonprofits nationwide. Some of our recent projects include San Diego State University, United Way, and Habitat for Humanity. All right, let's look at the solar loan first. So the CollectiveSun Solar Loan is a loan designed for nonprofits by nonprofit professionals with interest rates that are based on community impact, or in other words, the valuable work and services nonprofits provide in their community, and not just credit score. So the loan features a payment holiday during construction. That just means no payments while the system's being built, no prepayment penalties, and no collateral beyond the solar equipment itself. We designed this loan for organizations that intend to take advantage of direct pay. So by its very design, as Lee indicated, the CollectiveSun Solar Loan is direct pay ready. Now, what does that actually mean? It means that we provide 100% of the installation costs. because you've got a significant direct pay tax rebate that's coming at a future date, but your installer is not likely to accept an IOU while you wait for that rebate to arrive. So you need a loan that provides 100% of the installation costs. The CollectiveSun solar loan achieves that by providing gap or short-term financing for that anticipated direct pay rebate amount, long-term financing for the remaining installation costs, and then what we do is roll that all into one simple loan with a set payment. Then when you do receive your rebate, you remit that to us to pay down the loan. The term length on the CollectiveSun solar loan is up to 10 years, and currently interest rates start at 4.99%. So when you choose the CollectiveSun solar loan, your organization will own the solar equipment, be responsible for negotiating your contract with your solar installer, provide your own project management, and be responsible for timely filing all associated direct pay tax filings, which we've just kind of walked through some of that process in this presentation. All right, with that said, let's kind of move on to the solar lease. So the CollectiveSun solar lease, this is more of an easy button solution. So we do the heavy lifting to secure affordable financing and make sure the project is built and delivering energy for the nonprofit. We don't get paid until the project is built and generating energy for you. So when you choose the CollectiveSun solar lease, we're going to do the work to select and vet a qualified solar installer. We're going to handle solar installer contract negotiations and management. We're going to take care of construction management, including the review and verification of contractor milestones, secure lien waiver and releases to protect the nonprofit against construction liens, manage construction payments to contractors, subs, and material suppliers. With the lease, there are no application fees, setup fees, or fees of any kind, and no hassles for the nonprofit dealing with tax credits, understanding direct pay tax filings, or any IRS filings associated with the solar system. So the lease itself has a 20-year term, and early buyout options are available if that's of interest. Full operations and maintenance are included. Now that we've talked about features of the loan and the lease options, the next obvious question is, how do you decide which option is the best fit for your organization? How do you make sense of it all? So we suggest starting with some practical questions, to which there is no right or wrong answer, by the way. This decision is going to be more about what resonates with the internal culture of, and resources, I should say, of your organization. So start with these three things. Do you have in-house construction management expertise? A lot of times we see larger nonprofits do, but many other nonprofits function with a volunteer staff that's already bandwidth constrained and do not have construction management expertise, let alone time to manage the project installation itself. 2, are you comfortable bearing construction risk? So solar installations are indeed construction projects. And as with any construction project, things can go wrong. So is your nonprofit prepared to navigate that and to bear that risk? And then the third question to start with, are you comfortable bearing long-term ownership risks? If you purchase the system directly, your organization is then responsible for the long-term costs associated with owning and operating a solar system. When you lease the system, CollectiveSun Foundation bears the risk of ownership and is responsible for operations and maintenance costs. So it is worth mentioning that there are, of course, additional considerations when you are comparing a direct purchase, whether you're using cash, whether you're using a loan through CollectiveSun, and comparing that with a lease option. Comparing a loan to a lease is not an apples to apples comparison, and it may be more akin to, do we buy a lawnmower and mow the lawn ourselves, or a DIY approach, versus do we hire a landscaper and let an expert do that work, more of an easy button approach. So nobody's going to know better than you which solution is the right fit for your organization. Nonprofit solar financing is not a one-size-fits-all conversation. Because of that, we're very excited to be able to offer nonprofits a variety of solutions. Now, before we close out information on the loan and the lease, Lee, do you want to add anything to that before we open it up for Q&A?
I guess I just add, extremely well said. And this is as much cultural as it is technical. And so you have to kind of ask internal questions about, as an organization, where do we get comfort, and there's no right or wrong answer. The right answer is the one that gets consensus in your group to move forward with a project. And so as you're evaluating all these choices, I mean, it kind of depends. You may have a really sophisticated tax department in your nonprofits, but you still hire paychecks to do your payroll. Like you may have expertise, but you don't have capacity, or you just maybe you don't want the headache. It just kind of varies, and so there's different dimensions to consider. And as long as you're going solar, keeping your eye on that long-term goal, that's really what counts.
All right. You know what this means? Time for some Q&A. Brace yourself, Lee.
All right, what do we got?
All right. So the first question that we have is, does this date mean the install or going live or the beginning of the installation payments or end of installment payments?
So I'm guessing that question came up when we were talking about what does place in service mean?
I think so. It was quite early in the
Yeah.
presentation.
And of course, the answer is it depends. So going through your list, some of those are obviously not it. Like it's not when construction starts. There's other areas in tax law that are very focused on starting construction. This is place in service. It's different. It's ready and available for its intended purpose. So it's not going to be correlated with when payments are made necessarily, when milestones. If you're bridging 2 different years and you signed in 1 year, you made a payment or two payments, they may have started on-site work, they may not. That's not really a factor in this consideration. It's really when is the place in service date. Uh, Proxy for utility PTO is one way people evaluate that, and that
Going live was one of the kind of
going live,
needed
yeah. I mean, depending on what
closely.
that means,
Yes.
very very facts and circumstances kind of based, but yeah, I think going live among all those options is probably, if you had to pick one.
For folks that are located in Puerto Rico, are they eligible for these incentives as well?
Yeah, so I'm going to say short answer yes, but Puerto Rico and US territories, again, whole separate body of tax law and considerations and factors and circumstances. So you're going to want to spend extra time delving into the requirements for those. But at a high level, yes, generally speaking, you're going to have eligibility subject to certain restrictions.
Excellent. So what if the nonprofit does not file tax returns as they are tax exempt? And this might be more along the lines of, do they still need to file to get these incentives? I'll let you take it away.
Yeah, depending on the type of organization, I keep referring to churches and synagogues, mosque temples, because they enjoy the religious exemption. So they're going to do 990Ts. Governments are 990Ts. There's a You can delve into the guidance and see which form you're needing, but generally, I'm guessing for most people on this call, it's going to be a 990T. And yes, you're going to have to file that return, even if you're otherwise exempt from filing an informational return or paying income tax because you're a C3. Uh, you're still going to have an obligation to file the 990T.
All right. Who should register for that? The installer, the tax preparer, organization?
Can I back up one sec?
Yes,
You're still
please.
going to have to do that. You don't escape. There should be an asterisk there. It should say if you are the owner of the system. If you're the owner of the system, you're going to file. If you're leasing, you're technically not the owner of the system. A third party is. And in this case, we would be responsible for that filing as the lessor of the system. And you kind of bypass that whole headache entirely. You don't have to, you can ignore everything I just talked about with tax returns and filings because
Right.
that's off your plate and onto ours as a third party owner of a system. So sorry, I interrupted the next question.
No, I think this next question kind of goes right along with that. So who should register? The installer, the tax preparer, the organization?
Yeah, so this is again another dynamic question that technically, in order, if you're talking about, you can't file a tax return on someone's behalf, right? So there are rules about who's allowed to file the tax return itself. The pre-filing registration portal has its own separate body of instructions. They actually designate something called the clean energy officer, and that clean energy officer then has to be designated, and then they can delegate the responsibility to another person. But you can't de facto, just like an installer or a third party, just go in and do this for somebody. You're not allowed to do that. There has to be, tax returns. There's a process for doing that. You hire a tax preparer, and they will have you fill out forms. With the pre-filing registration portal, there's also a series of steps there that you're going to have to follow in order to authorize or designate somebody to do that for you.
Okay, here's a new one. What if the solar panels are related to the purpose of the nonprofit, which the nonprofit is set up as a community solar project?
If I'm not sure I totally understand the question. If the community solar project, it's really who owns the energy property. If that owner is the C3, you're asking sort of about the eligibility for direct pay itself. So I would follow ownership to try to answer kind of questions like that. But community solar can be set up differently. Like there are ways to set up community solar where you have fractional ownership of the entity, and then there are even some cases where individuals can claim the tax credit. Um, there's a private letter ruling all about how to kind of do that. But then there's other third parties that own it and they sell subscriptions into it. And if that third party is eligible, potentially eligible as a C3 or one of the other entity types, if they're the owner of the energy property.
All right. So if you have a system placed in service in 2023 and you have a 12/31 year end, when will you register for direct pay?
If you place in service in 2023, you have a 12/31 year end, you should register right away. You are going to have a filing obligation for your 990T on May 15th, and the IRS is asking for 120 days. So you should file to the pre-filing registration today. And if they don't have that number back to you by May 15th, you should file for an extension until you get that number back. You're probably fine, but because I think they're going to be faster than 120 days, but I would not delay that any further. The general rule is once you place in service, next day you should be filing the pre-filing registration, even if your deadline is, far down the road.
I'm just going to say, Poppy, would you mind emailing us directly on the community solar project and the question about the 990T so that we can give you a little more specific response? But I'm going to move past that question for now. What form do you need to fill out 120 days before your tax filing is due? And do you need an approval for it? And what if they fill it out, then do not want to move forward with the project?
Yeah, so the entity itself is typically the one filling out the pre-filing registration portal information. That has its own, entire sequence of instructions and steps that you have to go through, which is probably a topic for another webinar. But there's a extremely good user guide and a couple of videos that Treasury has published on this particular topic. So that all should be done first, but that's only after the system is placed in service. So if you're just proposing a system to somebody, you're probably not going to be able to provide the information that's needed to get that pre-filing registration number, which is the outcome of the pre-filing registration. And that number is what gets put on your return that we showed earlier in the webinar.
All right. Is direct pay the same as elective pay?
Yes. So elective pay is the IRS term. And there's some trivia history here because the IRS already had something called direct pay. It had to do with how you actually submit the payment for your tax returns. So when the rules came out, they couldn't call it direct pay, even though the general advocacy community was calling it direct pay because that made more sense, sort of from a, I don't know, branding, marketing perspective, and advocating for this to be passed in the legislation. but you can use them synonymously. It's just that when you read anything in Treasury documents, you're going to see it called elective pay because direct pay was already taken. Someone got the domain name, so to speak.
Right.
That
Now
was
it's
already
just a nickname now.
yeah, yeah. But for all intents and purposes, they're interchangeable.
Perfect. All right. A nonprofit placed solar panels on a leased roof. Do they qualify for the credit? It depends, but
It
take us,
depends.
yeah,
Yeah, yeah. Send me a follow-up email on that because that's an interesting question. I could probably argue it both ways. It depends who is the lessee and who is the lessor, and what is being leased, and what is the nature of the lease. And there's you just opened up like 15 more questions that are worth delving into. But I think your question functionally is there are ways to craft and structure it. Um, potentially to make work what I think you're kind of getting at, but it would really depend on some of the details.
excellent. Is the registration for the low income adder at the same site as the registration for elective pay?
No, totally different portals, totally different sign-ins, totally different activities, and they're going to happen at different times.
Where do you
Meaning
sign
that,
up?
sorry, meaning that the low income communities bonus adder is a process that will take place first before you get placed in service, and then after you're placed in service, you're going to go on to the IRS pre-filing registration portal.
Yes, totally different portals. Do we have those links in our deck or not?
Yeah, I put them not for the low income communities, that's just a different webinar, but for for the beginning one of the early slides, there's a link to the pre-filing registration portal.
Got it. Where do you sign up for IRS office hours?
So those were held and they have completed all of them. They haven't announced new ones yet. But stay tuned. When they announce them, there was a registration page that people can go to, and they ran them. They really brought on a full team and contingent of experts and people literally who are the ones reviewing documents to answer questions. They cannot be as liberal about answering questions related to interpretation of tax code. They just can't, unfortunately, can't answer those, but they can answer things like, the question earlier about who should sign up as the CEO that they call it, the chief energy officer, or what if we have three different entities, which one should be the one that registers in. I got this error message when I was trying to do something like they're really focused on how to work their way through the portal as opposed to what number to put into a particular box.
Is there a newsletter you can sign up for that will provide updates on when things like office hours become available, or a way for people to get a notification?
Yeah, there's a Treasury website. You can sign up. I think these were specifically out of. It was really interesting listening to the content. Technically, these office hours were for both elective pay and for transferability, but the majority of people asking questions were elective pay. There are a lot of houses of worship and folks who were, running into issues and had questions. Um, but it is that branch inside of Treasury that is kind of hosting them. But we'll publish some of this information. It sounds like there's a lot of interest, and it would be great to have more folks participating on those kind of open call office hours.
So I just noticing the timer tick down to 0. We have many more questions that we didn't get to. We will answer those and provide answers in a Q&A transcript. And so when Danielle sends out her amazing follow-up, you'll have a recording of the webinar, a slide deck, and a Q&A transcript. So you'll see all the questions and answers addressed in a nice, handy document. Other than that, any parting words of wisdom other than have a fantastic day and thanks for joining us today?
I think that wraps it up well. Thank you everybody for joining us, and we will be sending out, as you mentioned, copies of the recording and slides and any other information. Feel free to reach out.